So noted, in any case, my claim should not be failed. Yeah, please.
So again, variation of this. It's like if I don't declare that I smoke, 3 years are over. Let's say 15 years later, I die because of lung cancer, and I had smoked, but I had not declared. 3 years are over. Will that answer right now?
No.
Only 15 years. Thank you.
Yeah, please.
So, what kind of record keeping should a purchaser of insurance do from their side?
Record keeping.
Yeah, in terms of premiums paid or something like that.
Today, each and everybody is available in your email, in your mobile phone in form of SMS, Drive, OneDrive, Gmail Drive, Dropbox. So you can put all your things over cloud or in a suitcase, briefcase, in your almirah, in the house. It is up to you how do you want to keep the data ready with yourself. In terms of policy, nowadays IRDA is already offering e-insurance. That is demat form of, just like stocks, shares, which Krishna will discuss with you. Just like shares, you can hold your insurance policies in demat format. If you are holding your policy in demat format, you need not to hold your physical policy bond. Your e-policy will suffice. You only, in case of claim, your family needs to file the claim form. Along with that, put each policy number and the e-insurer details. From where your policy is logged with e-insurer. There are 6 or 7 e-insurer as on date. Carvey is there. Yeah, please. Existing policies can be kept, but in case of stocks, shares, there are only 2 depositories: CSDL and NSDL. CDSL and NSDL. In case of insurance policies, basically it arises due to ego and turf war between IRDA, the insurance regulator, and SEBI, the financial market regulator. IRDA asked to promote its own demat holding pattern. So as of now, some 6 or 7 different depositories are there. Now each insurer is not on panel of or linked up with each and every insurer. So it may happen your policies, for example, your policy is from A insurer. It is on link up with P, Q and R, but you are opting S, and A insurer and S insurer is not having tie-up. So there is a problem in this scenario. Yeah, please.
2 questions.
Yeah, please.
First thing, traditionally,
Yeah.
insurance, term insurance, cannot execute, per se, there is a bill, there is an executor. Like that, my family, I am interested, I know financial, I have financial interest and all that. And my family, they will get to know after 2 years the hardships that have gone, there is no money. But immediately when I die, they may not be enough, they might not go and claim the thing. So there were traditionally there were agents who acted like an executor to get the claim done. Even if the family was not so much interested. Now with the online term plan, this role of agents have
Someone is not there to handhold my family in my absence.
Yeah.
Basically, you want to say.
Yeah. So is there a mechanism to make sure there is a third party executor who will make sure?
Mechanism lies with you. As many people from the group knows, in my case and Pattu case, it is very clear. If something happens to me, standard instruction to my wife, please dial or contact over Facebook to Pattu, and whatever Pattu says, you need to do that. In case of similarly Pattu, if something happens to Pattu's wife will die, Ashal, this has happened, please do tell us. So in the same manner, you need to create your own fallback upon person, your friend, maybe from your family, which is there in your absence to handle the things properly. You have to decide. If you are comfortable with Ashal, you can select me also. If you are comfortable with Pattu, you can select Pattu. If you are comfortable with brother or brother-in-law or sister-in-law, something like that, or someone your close friend, it is up to you to decide which one is going to be beneficial for your family in your absence.
Second thing
In terms of person, huh?
the second question is on claim settlement ratio. How reliable is it? Because I read somewhere, sometimes there is a problem in registering a claim. Sometimes there is a problem in registering. We go by claim settlement ratio while choosing between the insurance providers. Is that a right way?
Claim settlement ratio is not a right way to judge the quality of insurance. Reason is, if you look at the claim settlement data, within the data itself, if a company is just 5-year-old, like Aviva or Agon, Religare, if a company is just 5-year-old, majority of claim for that company will be early claims. So will it check deeply or not? If it is checking deeply, as I just gave you the demo, it will find loophole or not?
Yes.
Then it will deny claim or not?
Yes.
Again, look at different way. What is the overall concept of insurance? Each one of us is giving, say, 100 rupees to cover our life. Okay? Now, through probability theory, insurance companies or underwriters come to say 100 people are sitting in this hall. In a year, only 1 or 2 people may die out of these 100 people. So they calculate, okay, if we take 100 rupees insurance from premium from 100 people, making it 10,000 rupees. So we can provide a sum assured of 2,000 per person or 3,000 per person. So if sum assured is 3,000 and if 3 deaths occurs, 9,000 rupees is gone as claim settlement. Still 1,000 is there with the company. If company is not doing its work properly for claim settlement and some loose cannons are doing mischievous things and dying, then what will happen? Our money will go to compensate those people. So in a sense, in second year, third year, there will be shortfall because instead of 2-3%, 5-6% already died and money is already gone. Pool fund is in negative. Are you getting?
Right.
Yeah.
So that's why do not think always that insurance company or insurer is doing injustice by denying the claim.
So is it okay to say, go to the market, whoever is giving the least premium for a given sum assured, take that?
Let me twist the question. If you are going to purchase car, which brand will you prefer? Just for example purpose, say Maruti Suzuki. Within Maruti Suzuki, you opted for Dzire. Okay. Now there are 10 dealers within Bangalore. All are offering Maruti Suzuki Dzire. Now will you go for least possible price or highest possible price? Why? पैसा बचाना सबको अच्छा लगता है बॉस. Same thing is with your term life insurance, term cover. It is actually, many people think when you are purchasing term cover, it is end of planning. No. Actually, it is start of planning. Why? As of now, say, your age please.
Santam.
Age.
29.
29. Okay. Santanam is 29 years old. Married?
No.
Okay. Going to be married and then after hum do hamare do, we too all do. Hopefully.
Let's for now take it.
Okay. Just for example purpose. So by that age. Just for example purpose. I can give my example also, okay? If you are feeling impressed.
I'm not feeling embarrassed.
So by the age of 35 or 36, he is having lot of financial future liabilities and still by assets or investments, he is in poor condition. So he is having a cover of say 50 lakh or 1 crore. Now, if something happens to him, he knows that insurance company will provide 1 crore rupees as a claim amount and my family can fulfill all the dreams, all the liabilities through that 1 crore rupees. Till this point clear? If nothing happens to him till age 40, he is alive, he is kicking, he is earning. From the age of 29 till the age of 40, it is 11 years. Some part of expenses are already over in terms of marriage, own marriage, in terms of kids' arrival, in terms of initial schooling of kids. So certain part of expenses are already over.
Right.
At the same time, he is saving some money, investing somewhere else and creating some wealth. Fast forward to 45. Now kids are in 7th class, 8th class, 10th class. More expenses are already over. He is still alive. He is still creating, saving, investing, creating wealth. So now he may be in a situation that his own net worth, value of his assets and investment minus liabilities is say 1.2 crore rupees or 1.5 crore rupees. Now, should he continue with the cover or not?
He has a choice.
Depends upon your goals.
Yesterday it was raining in Bangalore. You were on board. So you opened your umbrella and walking. After finishing your walk, you reach in your apartment. Now RCC slab is above your head. Will you still keep your umbrella open? Please say loudly, what will you do? So at whatever point of time, once his own net worth is exceeding the cover amount, you need not to continue your cover beyond that point. Condition, your liabilities are well calculated and your net worth is there to take care of those future liabilities. Clear? Yeah, please.
So, when it comes to term insurance, the sum assured, on what basis, what are the different parameters should I consider to go for the sum assured? For example, right now I am 33 and married. So, should I think in terms of, okay, next 30 years I'm going to be alive, let's say, and so I have my wife and parents with me. So, should I consider in terms of the inflation and other things in future and decide the sum now?
There are many ways. I got the drift of your question.
Yeah.
How to pinpoint the figure? What is ideal term cover figure for me?
Yeah.
50 lakh or 70 lakh or 1 crore or 2 crore or 5 crore or 10 crore
Yeah.
or 20 lakh or 5 lakh?
In addition to that question, should I increase the sum over the period or should I stick to one thing right now itself and sit?
In general, it is advisable to have a large cover from day one. If you want to go with split covers, multiple covers, then again it is okay, subject to your personal liking. Remember, it's personal finance, hence personalize it. If you are comfortable with having 2, 3, 4 policies, it is also okay. If you want to consolidate with a single policy, then also it is okay in terms of number of policies. Regarding the cover amount, there are so many online calculators available, including Pattu's free FinCal. You may use any calculator, or a very crude, very rough calculator. Whatever your monthly expenses are today, monthly expenses, not income, monthly expenses. Monthly expenses multiplied by 400. That is good enough. If you are having any loan also, please add that loan with the multiplied figure. For example, if your monthly amount expense is 20,000 rupees, So 20,000 multiplied by 400, making it 80 lakh. And you are running a loan of say 20 lakh rupees. So 80 lakh plus 20 lakh, making it 1 crore. Or your expense is 50,000. So multiplied by 400, you are getting a figure of 2 crore. And you are already running a home loan of 80 lakhs. In that case, your cover amount will reach to 2.8 crore. Something like that. It is I am giving very crude example. You may ask why I am sticking to 400. Why I am sticking to 400? Why not 300 and why not 500? If you go into detail, if all the money received as claim amount after paying the loan, whatever resultant is there, is parked in basic bank FDs, and whatever rate of interest your family will get from bank FDs, this will be equal to your monthly expense. That's why I opted for 400 figure. If you are comfortable with 500, make it 500. If you are comfortable with 300, or you are comfortable with Pattu's calculator or somewhere else online calculator, whatever way, all are okay.
One question.
Yeah,
If
please.
critical illness, if you take it from a general insurance, it's available only for 1 or 2 years.
Pardon?
If you take a critical illness from a general insurance, it's available only for 1 or 2 years. The cover, it's not for lifetime, like when you add to a term cover.
Okay.
So
In
what-
your life, I got the drift. I got the drift. I'm just after finishing my answer, then you can again conclude. In your life, how many times you died? Only once. So your life cover is a long-term contract starting from today, and for next 10, 15, 20, 25 years you are paying same premium. Decided today. In your critical illness, in your accidental policy, in your house, for your scooter, for your car, things are changing each and every year. Your health may not remain same after 2 years, after 3 years. That's why long-term contract for general insurance are not available.
Okay, but
Why? Because you may claim several times in general insurance. This year you may go for say diabetes related problem. Next year you may go for liver problem. Year after you may go for heart problem, for stent, angioplasty, angiography. So you may have several claims in next 3, 4, 5, 10 years from general insurance. That's why it is only a 1 or 2 year contract.
But they don't renew it. If, for example, I've been buying for 5 years, say, the general insurance, renewing it without fail. But in that 5th year, I get some disease due to which it increases the chance of cancer or something. They don't renew it the moment you inform them. Isn't that a risk which is not covered?
Yes. No, it's not like that. They will not renew it.
Yes.
They will renew it, but particular sum assured, what you are having as on date, will not be allowed to increase.
Yes, it won't be allowed to increase, and even they exclude that particular whatever comes out of that disease.
Again, different types of things are there within health insurance. Should we move on for health insurance?
No, I'm just talking about
No, no, no.
One last question.
Yeah.
Instead of sum assured, now some other flavor has come. Instead of lump sum, they pay some amount yearly or monthly.
Yes, these kinds of variants available where a lump sum is paid, or you can put lump sum with company itself, and company will keep paying certain monthly amount or certain yearly amount to your family. These variants are available, but personally I would prefer one-time lump sum amount with my family, and then Pattu will decide what to do with that money.
One last question.
Yeah.
The age, term.
Yeah.
What should be the ideal term? 60 or 70 till what? From the age perspective.
From age perspective, till the time you are visualizing that your financial liabilities will remain active, till that point of time, you should have your term insurance. Just for example purpose, I married at the age of 27, 28. So, and my son, and after that daughter born in 2011. So next roughly 24, 25 years, that is 2036. By that time, hopefully, my expenses related to my daughter's education, her career, or might be her marriage if she permits, will be over. So by the age of my 59, 60, that is in my case, my retirement is 60 years, and that is happening in 2037. So by 2037, my financial liabilities, son is already elder, so being 5-year elder, so his liabilities are already over. So by the age of 2034 or 2035 or 2036, my financial liabilities are getting over. So at max, in my case, cover is coinciding with my retirement age. If somebody is getting married late and then family is starting late, and due to which financial liabilities may continue till the age of 64, till the age of 65, till the age of 68, then the person should cover till that point.
If I permit, I will add another thing. It's also only the liabilities, but I think as part of the planning, the term insurance is taken after